Despite the chaotic market crash, exciting Bitcoin news seems to keep flowing in nonstop. Bitcoin sentiment from the US federal government has never been more optimistic. Once the dust settles, Bitcoin looks poised to have an incredible upward rally throughout the end of this year. In this episode, we will discuss the Bitcoin Strategic Reserve, attempts by the US to reestablish dollar dominance, OCC allowing banks to custody Bitcoin, El Salvador versus the IMF, and so much more. If these topics intrigue you, like, subscribe, and stick around for the rest of the video. I promise you won't want to miss what's next. Finally, it looks like our current administration got it right. On March 6, 2025, just 4 days after the unofficial announcement of a crypto strategic reserve, President Trump signed an executive order. This order establishes a Bitcoin-only strategic reserve, separate from the digital asset stockpile. The narrative of Bitcoin as digital gold seems alive and well, and we will discuss its potential benefits in a second. But let's get back to some key highlights from the executive order. First, we hodl. This step includes the auditing and proper storage of currently held Bitcoin. The next bombshell, which has been a point of contention, zero taxpayer funds will be used to purchase Bitcoin. Lastly, and I believe most importantly, the subcommittee will develop budget-neutral strategies to acquire more Bitcoin. Here are a few ideas from notable investment firm VanEck. Now it's up to the executive branch and Bitcoiners everywhere to educate Congress on the importance and benefits of Bitcoin for the entire country so that this executive order can be passed into law, because otherwise it's utterly meaningless. Now about that digital gold point. Let's discuss it. David Sacks, crypto czar, emphasized the need to separate Bitcoin from the broader crypto market. His reasons were that Bitcoin is the first and most proven blockchain, having been around for over 15 years. Additionally, it's scarce with a capped supply of 21 million coins, and it's secure, having never been hacked in its history. I wonder where we've heard that before. Sacks also called Bitcoin digital gold, and here's why that's significant. Before Richard Nixon took us off the gold standard in 1971, our dollars maintained their value and there was much less inflation because the dollar itself was pegged to something of value. This is evident by this chart that shows how wages kept up with inflation until exactly 1971. Then they diverged. Inflation has exploded and wages have stayed fairly stagnant in comparison. This is important because it illustrates what our money could be if we kept it attached to an uncorrelated asset, and now we're once again presented with a new opportunity to do just that, with Bitcoin. In many ways, Bitcoin is better than gold. It beats gold in every measure of hard money: durability, portability, fungibility, and scarcity. Subscribe for future videos on these topics. I cannot overstate the importance of pegging our dollars to something of value like Bitcoin, and here's how that would happen. Bitcoin bonds. To understand this strategy, we must first understand the treasury markets. Countries offer treasury bills, notes, and bonds, which are loans of their currency to other countries at a certain interest rate. T-bills are short-term loans, 2 weeks to 2 years. Notes are medium-term, ranging from 2 years to 10 years, and bonds are the longest term, lasting anywhere from 10 to 30 years. This basically allows the seller, in this case the US, to raise cash immediately that could be used, in this case, to buy Bitcoin. To maximize their Bitcoin holdings, I think the US would likely use bonds because they now seem to understand the importance of holding Bitcoin long term. And bonds give the US the longest amount of time to benefit from Bitcoin's price appreciation. The US government will share some proceeds from Bitcoin with bond purchasers at the expiration date, which will make the US bonds more attractive to buyers, while also keeping as much of the Bitcoin profits as they decide for themselves. The bond market is already massive. The US sold about 23 trillion bonds in 2023 alone. However, the dollar continues to lose value due to overspending and a staggering $36 trillion in accumulated debt. Imagine the advantages of the US offering $2 trillion in Bitcoin-backed bonds. For example, at just 1% Bitcoin, that's $20 billion in buying demand, about 200,000 Bitcoin. This could quickly force Bitcoin's price higher. And remember, 20 billion is just 1%. They could, in theory, choose any percentage, but let's take a look at what would happen at 5% Bitcoin bonds. At 5%, this would equal 100 billion in buying power, easily the biggest buyer in today's market. In theory, at today's prices, this would buy all the Bitcoin left on exchanges currently, about 1 million Bitcoin, and would immediately push the prices into multiple millions per coin. Okay, the Bitcoin reserve announcement was huge, but somehow we may have gotten even bigger news the following day. On Friday, March 7, 2025, the OCC, or Office of Comptroller of Currency, released an important letter. In this letter, they announced that banks could now custody Bitcoin. This opens the door for creating numerous products around Bitcoin and other digital assets, like Bitcoin-backed loans, credit cards, lending, and even mortgages. This marks a stark contrast to previous years of unclear regulation, SEC lawsuits against various crypto companies, and banks freezing accounts for customers making crypto purchases with their own money. This shift is going to serve as a huge catalyst for Bitcoin price appreciation and mainstream adoption. And if you don't believe me, check out this short clip from Michael Saylor about this very topic. While the U.S. executive branch seems all in on Bitcoin and crypto adoption, other federal organizations still appear resistant. This tension is evident in the IMF, or International Money Fund's, ultimatum given to El Salvador this week. If you recall, El Salvador is the nation who became the first nation to adopt Bitcoin as legal tender in 2021. Since then, their country has flourished both economically and socially, as their president Nayib Bukele has established a flawless Bitcoin strategy and slashed crime throughout the country as well. The IMF has agreed to offer El Salvador $1.5 billion to pay off debt, but under one condition: they stop mining, buying, and anything else associated with Bitcoin. El Salvador has been purchasing 1 Bitcoin per day for the last 4 years and has also been using active volcanic energy to mine Bitcoin. Talk about all in. As you probably imagine, Nayib Bukele took to X and basically stood on business with a resounding no in the following post. Check it out. Interestingly, the IMF is a US-based organization located in Washington, D.C. If this gives you any insight into the attitudes within Washington towards Bitcoin, it could indicate trouble ahead for the executive orders as they move to Congress for approval. That's why it's crucial to keep educating people about Bitcoin scarcity, decentralization, and other superior monetary properties. It's essential that everyone understands that Bitcoin is a deflationary currency that improves the lives of savers over time. We need everyone, especially members of Congress, to understand that Bitcoin is fair and benefits everyone, not just the wealthy elites. Let's talk about scarcity. There are 60 million millionaires worldwide, which means roughly 1 in every 133 people is a millionaire. If each millionaire decided to buy 1 Bitcoin equally, they'd only be able to purchase about 0.35 Bitcoin each. This suggests that 0.35 Bitcoin, if properly understood, should be valued at or above $1 million. Currently, 0.35 Bitcoin is priced around $28,000, which is nearly 40x away from 1 million. This means if you put $100 in Bitcoin today, it will be worth $4,000 by the time we reach 1 million per coin. BlackRock seems to resonate with this view, having stated as much in a recent article. This situation illustrates Bitcoin's true scarcity. Most wealthy individuals remain undereducated and underallocated when it comes to investing in Bitcoin. Your knowledge and interest gives you a considerable advantage to accumulate Bitcoin now, while it is still extremely undervalued. Now, despite all the positive news we have discussed and the potential paradigm shift in federal acceptance along with clearer regulatory frameworks, Bitcoin's price continues to fall. Here's the current price. However, if you've been around Bitcoin long enough, you know this is par for the course. Young companies, industries, and technologies are often mispriced for extensive periods before becoming widely understood and correctly valued. This presents a fantastic opportunity if you understand Bitcoin and have the conviction to buy and hold through the turbulence. No matter what happens in government or worldwide, Bitcoin will likely continue to absorb wealth from those seeking a safe, uncorrelated store of value. I hope you take this information to make thoughtful choices about where you store your money. And for the record, I believe Bitcoin is the best risk-adjusted investment for improving your current and future financial situations. Thank you for joining me today. If you found this video insightful, helpful, entertaining, please like, subscribe, and hit the notification bell for future updates. Also, follow my Substack. It'll be in the description below for more in-depth and timely Bitcoin news. Thanks again. I'm Ty. This is Magic Money Pill.